Hello, everyone, and welcome to today's Traders Mind Chat show. Today, our topic of the day, going to be talking about danger signals, knowing when and how to sell. So, let's jump right into it. The purpose of this is to give you something tangible that's going to help you to figure out when a trade is going bad versus when it's just having a bad day. This is something that I struggled with personally for a very long time. And so that's what helped me to come up with this danger signal concept. When is the time to sell versus when should I be holding on? This danger signal of knowing when to sell. This topic was actually requested last week by Darren W., who was watching over on YouTube last week. So, wherever you happen to be watching, we're streaming all over the place. Wherever you happen to be watching today, please subscribe to the channel, turn on the notifications, and leave comments down below. And perhaps we'll talk about your topic on a future episode. But let's get into what we have right now. So, for today, we're going to be talking about how to define danger signals. What in the heck are they really? How to create a checklist of these danger signals for yourself. So that way you could go off and use this tool. And then how all this is going to allow your winners to run further. It's not just about cutting the losers, it's about allowing your winners to run further too. So let's dive in. All right. So, what is a danger signal? Right? What is a danger signal? A danger signal. Here's Mike's definition of a danger signal. That's me. So, any signal that tells us that a trade is starting to turn bad and can aid us in a sell decision. It's kind of vague, right? It's meant to be vague. It's meant to be vague because you can have any kind of danger signal that you want. We have loads of people watching this from all over the world. All of us are going to be looking at slightly different things, and you're welcome to have any kind of danger signal that you want. The key, though, there's a few keys in creating your danger signals, right? So you want to create a list of all of the signals that you're going to look for. So grab your pen, grab some paper, and start writing down the signals that you're going to be looking for. Anything that makes it onto your list is what you're going to be looking for. Anything that does not make it onto your list is noise. You're not going to pay attention to any of that stuff. That's going to help you filter out so much of the noise. And that's a big key to why you're going to want to be doing this in the first place. So, you want to create a list of signals to look for. And then when you have your list, no one thing on your list is going to prompt an action, period. Right? It's really the full weight of evidence that's going to kick us out of a trade. So we're going to want to define how many signals we're going to need to take an action. Maybe you have a list of, I don't know, 5 or 10 danger signals. Maybe you have a list of 40. Uh, you want to figure out how many of those signals is going to take for you to prompt an action. So let me take a look at the chat here, see what kinds of questions are coming in so far, if any. But let's, while you're doing that and getting questions in, also I want you to think about this too, right? Because this session and these sessions moving forward, they're all meant to help you. And the best way that it's going to help you is by you actually taking action. So right now, type into the chat. Let me know, what are some of the danger signals that you could think of? Type it into the chat now. What types of danger signals can you think of? And I will start to jot them down as well. Let's see. Scrolling over here on Instagram, see if you guys are paying attention. Do you have any danger signals? How about you guys over here on YouTube or Twitch or any one of these streaming platforms? Twitter, what types of danger signals do you guys look for? Type into the chat. Let me know. Don't be bashful. This isn't the time to be bashful. Here we go. First person. All right. So I'm third. Let's get this going here. Hopefully you guys can see this. Actually, why don't I make this even a little bit bigger for you here? So danger signals. The first one, stock can go lower on high volume, right? So the stock, oops, don't want it to be underlined. So stocks go lower, low with volume. So a lower low with volume. Wonderful. Thanks, I'm third. Now here's one from Mike Angelo. Cut through the 50-day, say simple moving average, and also cut through key support levels, right? And we could really think of key support as different types of things. So one person that's, if you're trading similar to me, if you've studied guys like William O'Neill and Mark Minervini, and you know about base patterns, right? You probably know that from Stan Weinstein or maybe Nicholas Darvis or any one of these legendary type traders in this space. You know that price moves sideways, and when it moves sideways and it falls below a floor, that's support. Depending on the style that you have, support might be at one level or another level. All right, here's another one from Mike Angelo over on YouTube. In tandem with high volume is even more convincing sell signal. So cut through key support on volume, right? Very similar, but a little bit different. Maybe we want to keep track of both of those. That's wonderful. Let's see. Well, what else do you have? You guys are heating up here. Just gonna scroll through over here on Instagram. Instagram makes you scroll through their own chat, but all the other ones, all the other platforms are all over here in StreamYard. Well, shouldn't say that. Rumble I have on my laptop over here, monitoring that one. But we've got a decent start here. Give you guys another moment to type one or two in. Grab a drink of water. That's always important. Try to drink a gallon of water a day, and I actually have a whole bunch of these bottles lined up on the side over here to help me remember to do it. That's what I do to get myself to do some habits that I like. Some habits that are worth it. Keep the body cleansed, keep the body hydrated. All right, stock breakout with low volume. That's a danger signal. Interesting. Okay. Stock breakout with low volume. Very interesting. Thank you for submitting these danger signals. These are a great start. I want to share with you some of the danger signals that I'm looking at. And also, because I saw somebody ask about the book, my book already, I mentioned my danger signals in this book here, The Trading Mind Wheel. Go grab this on Amazon. But here are the danger signals that I personally am looking at. And you can see that there's a lot of them in this spreadsheet. And again, they're all outlined in the book, but we'll take a brief look at some of these here, right? So I'm looking at many of the things that you guys already outlined. I'm looking at price closes near its daily lows, and I'm looking at if it closes in the lower third of its range. That's one danger signal. Another one closes at the low of the week. How about closing near its lows on heavy volume, like what Mike Angelo and also I'm third referenced as well. I look at ATR, so I'm looking at a 1.5 times the average true range of a stock over a 10-day period. That's telling me if a stock is starting to lose momentum here. We're not going to go through all of these here. I'll scroll through it, and then later on you could pause the video, or if you're watching live, if you're taking screenshots, that's totally fine. But the idea here is that there's a variety of different signals that I'm looking for in every trade that I'm in. And you might notice that they're color coded, right? These ones are blue, these ones are yellow and orange and red over here. And these ones say all, those are open end. This is mid slash end and end down there. Well, what's all that mean? Well, part of what I do is I'm looking at how many danger signals does it take to kick me out of a trade in the beginning of a trade, in the middle of a trade, or towards the end of a trade. When I first get into a trade, I don't want to give that trade a whole lot of room. The reason why is because it hasn't proved itself yet. I just bought this thing. I want it to work well and I want it to work rapidly. If it's starting to give me a whole bunch of danger signals right off the hop, then that's not one that I want to give very much room. However, as a trade starts to work and starts to move higher and higher and higher and basically do what we wanted it to do, right? We bought it because we wanted it to move in the direction that we thought that it was going to move. So as it does that, it earns more danger signals. And so there's certain danger signals that I'm going to look for no matter what point I bought it at or where it's at in its life cycle. There's others that I'll look at as the trade moves later on and has made more money and some more towards the tail end of the trade. And that's how I like to do it. So danger signals in effect allow our winners to run if utilized in this way. They let us figure out when a stock might have had just a bad day, right? So if we had this tally here, right? Let's go back to this here, or look at one of your danger signals here. Say the stock went lower or cut through the 50-day moving average, right? Is that a reason to sell all by itself? Maybe, maybe not. What if it cut through the 50-day moving average in the middle of the day, but towards the end of the day, it rebounds and closes near the high of the day? What then? Right? Like sometimes you might have something where it's a buy signal and a sell signal, a little bit of nuance there. We need ways to discern that. And when we have ways to discern that, it's helping us to figure out what's a bad day versus what might be a time to sell. A bad day should not just be an automatic sell. We actually want to give ourselves multiple ways to sell a stock, but uh, that's a little bit outside of the scope here. Well, we're just focused on danger signals. Well, if you'd like, we could do a whole other series on different ways to exit a trade. Let me know if that's something that interests you. But anyhow, doing this, having this danger signal process is going to give you an objective way to determine when it's time to sell, right? You might see all different sorts of things. Well, we had a variety of things here, right? You guys gave us 5 already. Thank you for those. Uh, if as you go through the process, you might come up with 40 different signals like I have. And to keep it all in order can seem daunting, it can seem confusing. So if you keep a list of it and then you go in at the appropriate time, or whatever you decide is the appropriate time, take a look at your stock or your trade. If you're trading crypto or forex or whatever, the same process can be applied there. Whatever danger signals you come up with, you have your list. You go through it, and by going through your list, you're able to see, oh, you know what? This trade only had 3 danger signals. Maybe I should continue to hold it, right? And you could have specific rules of what's a hold versus what's a sell. It gives you a very objective way to not get rattled, right? Because a stock could plummet in the middle of the day, and then you go and you look at your danger signal sheet, and what could be a very scary bar might be, oh, you know what? It's actually not that bad. There's only 3 danger signals. This is a hold. And then next day, you're back and off to the races. And this is the purpose of it. This is what this helps you to do. So, any other questions while we're on this? Any other thoughts? Any other comments here? Let's go through some of Instagram and let's see here. All right. So, Karen says when people fear on top of market to take profit. Yeah, that's part of the reason for this too. So let's say that you're in a trade and your trade has been running and it looks good. And then all of a sudden it gets hit with a day, right? It has a bad day. Is that the top? Is it time to sell? Maybe it is, maybe it's not. We have different rules. There might be different ways that you're exiting trades. For me personally, I like to scale out of trades on the way up. But another thing that I'm going to do, I'm not just going to give myself one exit, right? If you're in a theater, there's going to be multiple ways for you to exit the theater, right? So that's what I like to do. I like to give myself multiple ways to exit. One of them is going to be these danger signals. So if I start to see these danger signals piling up and I'm in this trade and I am up 40, 50, 80%, it's time to lock in those gains, right? I don't want to give them back. It's about how much money we keep, not just how much money we make in a trade. It's about how much money we actually keep in our pocket. Let's see. Great question there, Karen. Any others? That was from Instagram. All right, next. Here's what we've got planned for next week. We've got big plans for next week. Next week, we're going to have a very special session. We're going to be going through the Trading Mind Wheel 8 Essential Skills for Trading Mastery. So, if you already bought the book, if you've already read the book, this is going to be great for you because you'll be able to come in and ask whatever questions that you have, and we'll be answering them. But we're going to be doing a lot more than that. If you haven't read the book yet and you want to go grab it, start to read it, it'll help you prepare for next week's session. But even if you haven't read the copy of the book or don't plan on it, that this is still going to be extremely helpful for you. And here is why. We're going to be going through all of the 8 essential skills needed for trading mastery, and I've outlined them here for you. So, next week, we're going to be talking about mindset. Mindset, I view mindset as our beliefs, our belief systems, emotions, and habits. All those things play into mindset. We'll be talking about journaling. Step 1, it's really step 1 of accountability and continuous improvement. If we're not tracking all of the different trades that we're taking, the different metrics, why we bought, why we sold, where, all those things, it's very hard for us to improve. Analysis, both analyzing trades and analyzing markets. It's very important to have an understanding of the trade that we're taking as well as the environment that we're taking it in. The trades that we've been taking recently, right? Very different environment right now versus even a couple of weeks ago, right? When the market and the indexes were all chugging along higher versus the last week or two where we've hit some resistance and we've seen some stocks move up rapidly, but there's also been quite a bit of chop. Different environment. How do you handle that? One of the ways is with how you manage risk. Your initial capital risk, your position sizing, and taking a look at the potential reward. Trade management, managing risk throughout the entire life of the trade. We already spoke about one of them. We spoke about that today with danger signals. We'll talk about other ways to manage risk next week as well. Then next week, it's going to be an extremely long session. Normally, we do these sessions for these Trader Mind Chat shows for about half an hour every Friday. Next week, I'm expecting to go well over an hour, possibly even closer to 2 hours. So get ready for a great session next week. Next, portfolio management, taking the big picture into account. Now that's important too, right? Because there's one thing about managing the trade, but how many trades are you going to take on? How much risk are you going to be exposed to overall? That's portfolio management. After that, post analysis, step 2 of continuous improvement. Many people journal. Not everybody goes back and takes a look at that journal and tries to figure out how to improve. Very important part of the process. If you're serious about trading, you certainly need that. You need all these, but you certainly need post analysis. And lastly, testing, right? Last but not least is testing, because testing covers a lot of bases. To me, testing includes factor modeling. So factor modeling, well, what in the heck is factor modeling? In brief, factor modeling means that you're going back and taking a look at what actually worked and then try to figure out, well, how did it work? Kind of reverse engineering, how did this thing work? That's what O'Neill did. That's what Minervini did. That's what so many of the great traders throughout history have done. Taking a look at what actually works and then re-engineering it and figuring out ways to customize it for themselves. We're going to talk about all this here. And so, with that said, I see a couple of other questions coming in. Let's see. Mike Angelo says that he just bought the Trading Mind Wheel right now. Wonderful. Yeah, you'll be well prepared for the talk. I'm looking forward to seeing you there next week. Let's see. What else? Also from Mike Angelo. How many danger signals puts you over the edge to sell? Great question. So let's go back to the spreadsheet here and let's talk about it. Right. So let me zoom out on this because I actually have some notes here that I share with our members. Right. And I just keep this on the sheet to help keep track. Right. So hopefully you guys could see this here. Why don't I zoom in a bit more? That could be helpful. All right, let me know if you could see this okay. In the beginning of the trade, right? So what's the beginning of the trade? To me, the beginning of the trade is when I first place my order and any time before my stop is raised to break even. When I still have risk on the trade, I consider that the beginning of the trade. And during that period where my stop is still down at the original place or where I still have my initial capital at risk, that's what I consider to be the beginning of the trade. And I don't want to give a stock that much room at that point. So I only give it six danger signals. And if I see 6 or more, to me, it's an automatic sell on that day. And I tally it up at the very end of the day. So around 3 o'clock Eastern, I live in New York. So that gives me about an hour before the close. I'll go in and I'll start to take a look at my positions. And I'll see some of them will be obvious that it's a great day closing at the top of its range. Some of them might be on the cusp. So I'll go in and I'll take a look at all these ones here in blue and these down here in yellow. And if it tallies up to more than six or more, then I know that, hey, by the close, I'm probably going to be selling this one. But I don't sell it right at 3. If it's on the cusp, especially like that, I'll still wait until about 15 minutes or so before the close, maybe 10 minutes or so before the close. And the reason why I give it that time is because you may have heard the term power hour. That's a real thing. Sometimes you get a rally in the last hour of trading off the lows, and when something initially had 6, maybe even 7 danger signals, all of a sudden, right? Like, so let's say that it's that it's closing in the low of its range, and that it's closing near the weekly low, right? But that could happen today. Today's a Friday, and let's say that you had some volume there. Then all of a sudden, Towards the end of the day, you get this surge and price climbs back into the middle of its range. Well, guess what? It just eliminated 4 danger signals. That's why I like to use this towards the end of the day, or at least that's how I use it. You can still use the broader concept of danger signals in your own way. That's just how I personally do it. And that's how I use it for the beginning of a trade. As I progress in a trade, it earns more. Same process, still checking in towards the end of the day, but I'm looking at 7 or more danger signals when I'm in the middle of the trade, when my stop is already at break even and I've taken some scale outs. And then for the end of the trade, right, where I'm letting that last bit run, then it's got some room. Then I'm giving it 9 or more. But there's also other types of danger signals that I'm looking at as the trade progresses further and further. So that's that. Let's see, well, what are the questions the guys have here? See something from I'm third. Let's read this one out. When you buy stock within the base and the stock runs up, then consolidates at new highs, how do you choose to add more money to the stock or to sell into strength? Great question. So, if the stock is consolidating well, then it's time to add to the position. And sometimes that ad will work and sometimes that ad won't work. So when I'm looking to add to a stock that has consolidated and then starts to move up again, I'm going to be adding a smaller position there, right? So when I'm getting in initially, let's see if we've got some good samples here, right? Let's go back in time and let's use uh, let's use Datadog. Yeah, Datadog is a sample of one that I was in. I am no longer in now, but I was in it. And let's talk through this one here. So this is Datadog. Datadog gapped up on earnings back in November. I didn't buy the gap up. I waited until it pushed into a break above the high of the gap. So I'm buying right in here. Then after that, price starts to move up and move up and move up, and then price starts to pull back and consolidate. As price is having a constructive consolidation, I'm looking for spots to see if, hey, maybe this is a place to add. And lo and behold, it consolidated well right around that purple line, that 21 EMA. And so I end up adding on this day over here. It runs up a little bit. It runs up, how much is that? That looks like maybe about 5-10%. Yeah, overall about 6.5%. So I'm taking a scale out somewhere in here, right? So I'm taking a scale out from both what I had back here as well as what I had added over here at this point. Now, on this day was actually one of those major danger signals where I'm starting to unload in a big way. And I believe I exited either all the position on that day or I at least rapidly raised my stop. Actually, well, thinking back to it, I believe I didn't exit there, but I raised my stop to the low of that day. And then on the following day, uh, yeah, price had gapped down slightly at the open, but the open was the high of the day. So I'm out of the full position right here. So everything that was bought back here, as well as everything that was bought back there. And that's how I start to figure out when I'm going to add and that process. So hopefully that helps. Let's take a look at some of the questions over here on Instagram, see if any of the questions came in. Dev2507 on Instagram says that he wants to learn about psychology. Well, Dev, next week you're going to want to come, because one of the big things that we're talking about here as we work through the trading mind wheel is mindset. And the reason why I call it the trading mind wheel is because mindset is a part of all of them, right? Mindset is the axle of the wheel. We have beliefs literally about everything. We have beliefs about journaling. We have beliefs about analysis, right? So it's our beliefs that are going to shape what's a danger signal to us versus what might not be even on the radar for the next person, right? Like that. That's our beliefs. So we're going to talk a lot about beliefs. We're going to talk a lot about psychology next week. So I hope to see you there. Let's see what else. What else? What else? What else? For those of you just tuning in, make sure that you like and subscribe wherever you happen to be watching. Drop comments. That helps to get this out to more people. And it looks like that might be about it. Hello from India. What time frame to add over position? From Karen. Karen says, "What time frame to add over position?" So I'll tell you what I do. And what I do is I will use multi-time frame analysis. What does that mean? That means that I'm not just looking at one time frame. I'm taking into account 4 time frames. When I'm looking at my charts, I've got my charts set up like this. Well, let's reset these charts and let's turn off the annotation so it looks a little cleaner here. So when I'm looking to take a trade or add to a trade or do anything, I'm not just doing it on one time frame. I'm looking at several time frames. I'm looking at monthly charts. I'm looking at weekly charts. I'm looking at daily charts. I'm looking at intraday charts. I'm looking at 30-minute charts. And the reason why is because I want to see the big picture. I want to see the consolidation. I want to start to see how price is moving down on the daily. And then if I find something that meets those three that I like, then I'm going down into the intraday charts and I'm getting very surgical and very precise with my entry price and my stop. And then I'm starting to think about how I'm going to manage this trade, where I'm going to take my scale outs, where I'm going to cut losses, all of it. And that's what I look at. Rupesh asking about crypto trading. Yes, all this works for crypto. I'm in several crypto positions right now. Some of those include Bitcoin. I've been in Bitcoin now for a long time. Let's see here. Where's the get this back over here? Yeah, I've been in Bitcoin for a while now, from down here at about 2,700, 2,800. Bitcoin's had one heck of a run. Been in Ethereum for a very long time. Time to raise this up about 40, 50% from down here at 1,800. And Litecoin has had a move. Not Litecoin, I'm sorry. Ethereum Classic has had a move. And this has been a very, very wild one. I got in way down here as it was breaking back above the 200-day simple moving average. And it had some wild volatility. You could see some of those days in there. It almost came back to the buy point, right? I was up about 35%. And then while I'm sleeping, I'm down to about 8%. But that's the nature of crypto. And that's how you need to size in order to be prepared for these kinds of potential moves. So that way you could be in for the much bigger move. Now it's up about 87%. So yes, all of it works with crypto. Karen asking some more questions. I use the 1 hour, 4 hour, 1 day, 1 week to add to position. Is that good? It could be, but here's the thing, right? If you're asking a very specific question, you and I don't know each other yet. I hope that we get to know each other a little bit more, but right now we don't know each other, and I don't know the systems that you're using or the trades that you're using or anything about your particular style. So I could give you answers of a general nature right now, right? Like things that could be universally applied. That's why I wrote this book, The Trading Mind Wheel, to start to give people a general structure. And then as we have a deeper conversation, we could start to figure out, well, what's going to be the right way to work for you? Because what works, what could be a great time for you, right? Like the 1 hour you mentioned, the 4 hour, those might be great spots for you, but maybe they're not. And the only way that I'm going to be able to answer that question well is to know a lot more about you. So, anyhow, as she says, I respect all your posts, very relatable. Great, thank you very much. Appreciate that. Back over here to YouTube. I'm Third says, how did you choose to hold the stock for the big move or just swing and take the profit? We'll talk about that a bit more next week because that gets into trade management, right? Number 5 over there talks about trade management and giving ourselves multiple ways to exit a trade. In brief, right, to not leave you with too much of a cliffhanger, I like to scale out of my position. So I'll buy a position all at once, and then I will scale out of it into strength. And I scale out of it a few different times. And the last bit of it, like the last 25% of my position, that I will let run for as long as it's going to go. And it will take major sell signals, major danger signals to kick me out of the trade. And I'll also trail it too. That one of the things that I do is set backstops. So we'll talk all about backstops next week. We're a bit over now, but next week again, we're going to be talking about the Trading Mind Wheel, 8 essential skills for trading mastery. That's going to start at 11:30 on Friday. I truly hope to see you there. And until then, much love, peace out, and have a great weekend, everybody. Peace.
Hey, thanks so much for sticking around to the end. If you're new here, hit the subscribe button down below and become a part of the Mara Wealth community. And make sure that you check out some of the other videos on the channel. They're exactly what you need to see. And leave a comment down below. I read all of them. Leave a comment.